So I don't know if you've heard, but Elon Musk, he came out the other day and he tweeted, made it official that you can now finally buy your brand new Tesla with Bitcoin. And this is pretty big news because they're the first car company to let you buy a car solely with Bitcoin. They've tackled some of the challenges because buying anything with Bitcoin, Bitcoin's price could go up or down 10, 20% any given day. So they've tackled some of those issues. But according to Elon Musk's tweet, he came out and said that now Tesla will officially accept Bitcoin as a valid form of payment for its cars. And if you look on their website, so you can look on their website for a brand new car. When you look to order it, it says you can order it with a card or you can pay with Bitcoin. And a lot of people have had questions about how this will exactly work. What happens if the price of, Bitcoin changes? How are you going to pay for your vehicle? Is how many Bitcoin you're going to need to spend change? And yes, that is how it exactly works. According to the Tesla Bitcoin FAQ page, they explain all of this. They say, how do you pay with Bitcoin? What if you send the wrong amount? How long does it take to process your Bitcoin payment? Can you send your Bitcoin from multiple wallets? And basically, you only can send your Bitcoin from one Bitcoin wallet. You can't send it from multiple wallets. Also, when you go to check out, you can either scan the QR code or copy and paste the Bitcoin address and the exact Bitcoin amount and send that exact Bitcoin amount from your wallet. Over time, how much you have to pay changes. So it automatically updates on the Tesla website to really follow the price of Bitcoin. So you're going to have to pay whatever it is at that exact moment. That's how much Bitcoin you're going to have to pay. But this is pretty big news because they're the first car company to really allow you to pay for a vehicle with Bitcoin. And other big news with this is that you have to be careful because when you buy something with Bitcoin, actually the IRS is going to tax this. So they're treating it like you're selling an asset. Same as if you sold a stock, same as if you sold real estate for capital gains. You're going to have to pay taxes on whatever capital gains you made. So let's say you bought Bitcoin at $6,000 per coin. You got one Bitcoin. Now it's at, let's say, $60,000. You're going to have to pay taxes on that $54,000 gain. So you're going to have to know when you bought it. So is it short term? Is it long term? You're going to have to keep that in mind when you're buying anything because the IRS taxes it the same way as if you're buying and selling an asset, same as if you bought a brand new Tesla with Bitcoin. But this is really, really big news. And speaking of Tesla, they also came out and spoke. We saw some videos to confirm exactly how their new touchscreen drive selector will work because just recently, Tesla had announced a redesigned Model S sedan and Model X SUV. They explained how those are going to be changes that are going to be implemented later this year, and they're removing the gear selector stalk altogether from behind the steering wheel, no longer going to be there. And they explained how really the vehicle is going to be able to detect automatically, autonomously, whether you want to go and drive, whether you want to go in reverse, what you're trying to do. It's going to use the cameras of the vehicle to determine if there's something in front of you and you're in a garage. It's not going to just drive right into the garage. It'll go backwards. But they explain how there will be a backup, and this backup is going to be on the touchscreen. It's going to look like just a little car. And the way this will work is on the car, on the screen, there's going to be a little car that you either swipe up, hold down and swipe up to go forward, or hold down and swipe down to go backwards. So either drive or reverse. That's essentially just a backup. That's not the main way it's going to be done. Main way is going to be through just autonomously, the vehicle sensing, using its cameras to determine whether you want to go forward or backwards. But let's say, for example, it's like a little ambiguous. You don't know if you want to go, if the car can't tell if you want to go forward or backwards. Let's say there's nothing in front of you and there's nothing behind you. Well, then you would have to go in and select on that screen because generally, let's say you're in a garage, it's easy to know. You're not going to go forward into the wall. You're going to want to go backwards. But if you're just in the middle of a parking lot, there's no one in front or behind you. You're going to have to use that selector on the screen to determine whether you want to go forwards or backwards. Right now, neutral, though, is buried a little bit deeper in the menu. It's still a little unclear how you're going to put your car in park, but we do have this video showing from people testing the vehicles out how it's going to actually appear on the screen. We knew this was coming. We didn't know how it was going to actually look, how it was going to function, but now we know what the backup plan is for the vehicles if you want to put it in drive or reverse. So that is pretty cool. And recently, In a Joe Rogan podcast in February, Elon Musk actually spoke about this. And he said that if you just get in, when you press the brake pedal and then press the accelerator, it'll figure out that whether you want to go forwards or backwards based on just what's in front of you. If there's obstacles in front of you, obstacles behind you. And he explains some of the other things like that as well. And he says eventually it's going to be so intuitive and so easy that you're going to wonder why you ever had that driver, like the stalk or the thing in the middle of your car to actually select whether you want to go drive, park, reverse. And he said it's really going to be just intuitive, and it's going to make, you're not even going to remember, it's going to be so much easier than actually having to change it yourself. Switching gears a bit, Slack now lets you DM basically anyone. And they just came out with this the other day, new feature, essentially trying to make it more of a community where you can DM people from other companies, other businesses, so you can work collaboratively. And they're trying to make it just a more collaborative space. They announced that this feature was being worked on back in October of 2020, but now it's finally here. You finally can do it. And this new DM feature builds on Slack's work with Connect, which started appearing last year. It started the pandemic, and Slack Connect is primarily designed to let businesses collaborate with one another, like I said, and through shared channels and cross-organizational DMs. But now, these DMs, you could essentially DM anyone. And the way it works is, like on this screen, when you want to DM anyone, you just need to know their email. When you know their email, you can send a DM to them, an invitation to start DMing back and forth. So that could be anyone who has Slack. And that is really, really cool. They're starting to expand their business a bit more, helping them generate more revenue, helping them make a more shared community. And it's just building upon the features that they already have. Right now, essentially everything is organized into different channels and different groups, and it's all broken down pretty systematically. But if you want to DM someone, you want to message someone privately, now you could do it with anyone. However, there have been some issues with this because Slack, as soon as they announced and as soon as they released this DM feature where you could DM anyone, they had to quickly remove message invites in its new DM feature. So essentially when you were sending that initial message with Slack, with their new DM feature, the day that they did this, it was already being abused because when you send, let's say, for example, it looks like this, where you can DM anyone. You just put their email in, you put any message you want. But the problem with this is that people were already abusing it, and there was already issues of people being harassed because the way that Slack works is you essentially can't block these emails. You can't block anything. You're going to get this email saying that you have a new DM from someone on Slack, and do you want to accept or decline the invitation? And so now they remove the feature to actually be able to include a message because people were already being harassed. And the problem with this is that you couldn't block this in Slack. You couldn't block your email from receiving it from, let's say, whoever's harassing you. And that person could just keep sending you invites with new messages. So now they had to delete that entirely because the way Slack works is essentially you can't block it. You can't block your email from getting these DM invitations. So now they had to block that. You can no longer... they removed that feature, so you no longer can send a message along with that initial DM invite. You still can DM anyone you want, but you have to send that initial invite, and if they accept it, then you can message back and forth. Now you can't send an initial message with the invitation. So they already announced a big change to this because of harassment, and they said it's not in line with the company, like not in line with what they're trying to do as a business. Their business is trying to be, a safe place to message and communicate in your business with other businesses that you're working with. And this was an issue. This was something that they were working on. They just didn't feel like it was in line with what they're trying to do as a company. So they wanted to switch it up. They wanted to make sure that people felt safe, that you couldn't be harassed. And it is an issue if people could just send any message they want and you can't block it in your email. A lot of people might think, well, can't someone just harass you by sending an email? Yeah, but you could have systems in place to block or prevent that person from actually, from that email going to your inbox. It could be sent to spam. You could block that person. But with Slack, you're going to get every single invite someone sends you. So you couldn't just block that person. They could just keep sending you messages. So they already had to get rid of that. It was a pretty big deal considering it was the day of their release. The day of the release, they made a pretty big change to how it actually works. Next up, let's talk about OnePlus. OnePlus came out with a new smartwatch at a pretty surprising price of just $159. And this is their first smartwatch ever. And this is something that I was shocked with. It is the lowest priced smartwatch by far. No one even comes close. And like the Apple smartwatch, all the other companies that have smartwatches can't really compete with this. But there's one big issue with the OnePlus smartwatch. So first of all, it has some pretty cool features. It has a round design, not like an Apple Watch or the Oppo watch, different from those because those all have square designs or not a circle. The other thing that this has is they promise a very fast charging. The way that these watches work is the OnePlus Warp Charge system allows you to charge your watch in 20 minutes, and it lasts for 1 week. 1 week of battery with a 20-minute charge. They better get that on the phone soon. That's pretty impressive. That is pretty impressive stuff to be able to charge your watch for 20 minutes, have it last for a week. Much better than Apple Watch, other companies out there. Other features with the OnePlus, before we get into that, the one downside, and it's a pretty big downside, but other features that are pretty cool are 1 gigabyte of RAM, 4 gigabytes of internal storage, integrated speakers, there's Wi-Fi, Bluetooth, GPS, all built in. There's no cellular option. So if you want connectivity on the watch, you'll have to be nearby to your phone. Other things that it has over 110 workout modes, built-in GPS, waterproof, obviously. And if you're going on a run or you're exercising, you can track your heart rate, track all of the same things that Apple Watch can. You can keep 500 songs on that so you don't have to be anywhere near your phone. That all is good. The one problem, and it's a pretty big problem, is that it's not yet compatible with iOS devices and it has fewer third-party apps. So even though it's significantly cheaper than a lot of its competitors, Samsung has a $250 sports watch. Apple's smartwatch is much more expensive. So even though it's the least expensive model, really, in terms of smartwatches, the big problem is that a lot of people have iPhones and it's not compatible with iOS devices and it doesn't have as many third-party apps. So that's a big deal. So even though it's less expensive, it does very similar things. If it doesn't connect with your devices, it defeats the purpose of it. You want to have the point of an Apple Watch is where you can check your messages, you can call people, you can listen. It connects everything on your smartwatch directly to your phone. And you want to be able to do that. That's the point of getting a smartwatch. Otherwise, you just have a normal watch. So that's the point of it. And if OnePlus cannot do that and they're not compatible yet with iOS, that's a pretty big deal, at least in my opinion. I don't know. Let me know what you guys think, but that's a pretty big deal. Pretty big deal. Speaking of big deals, though, Disney Plus has been killing it. Disney Plus is over 100 million subscribers, fastest company to ever do that in the streaming space. And now some of their big movies like Black Widow and Cruella are now coming to Disney Plus at the same time that they're launching and releasing in theaters. Other movie titles as well are doing the same thing. And this is really big news because just a couple years ago, you would have thought it was crazy to release a movie on a streaming service. And a movie like Black Widow, Cruella, these were supposed to be really, really big movies that were going to perform huge in the box office. And it's interesting to see, at least in my opinion, how much movie theaters and this industry is changing. Disney Plus, they did so much better than expected with their streaming service. They gained so many more subscribers than they ever thought they would in a much faster time period. that part of the business is killing it. So they're trying to focus on that. And by focusing on that, they're releasing all of these new Marvel movies. All of these new movies, they're starting to release them on Disney Plus. And I think eventually we may see them strictly release them on Disney Plus. But right now, Black Widow and Cruella are set to debut on Disney Plus as a $30 premium access title alongside other releases. Black Widow has already been delayed about 2 months from when it was supposed to debut. And Cruella, they're still set for the same release date of May 28th. Black Widow is set to debut on July 9th. But either way, this is really interesting to see. Interesting to see how they're pushing back the movies and they're going to be releasing them on Disney Plus first. It makes sense. You know, it's like they have this service that's doing so well. Disney Plus, their streaming service, is doing extremely well. And they want to promote it. So what's a way to promote it? And first thing that comes to mind is release the big movie titles on that platform versus releasing them in the movie theaters. Because if people want to see Marvel and they want to see these movies, and let's say they only released them on Disney Plus, well, I bet a lot of people would spend that, monthly fee to get a Disney Plus subscription just so they could watch that movie when it's released. And if they do that, that might get a lot of people to actually stay on the Disney Plus platform. They might find other movies, other shows they like. And it's really just a smart business move. It's a great way to get new subscribers to their streaming service. And I think eventually we're going to see all of their movies strictly released on their Disney Plus platform. Recently, their CEO, Bob Chapek, came out, and when Disney Plus hit 100 million subscribers, he basically said that their direct-to-consumer business, their Disney Plus service, their streaming service, is the company's number one priority, top priority, and their robust pipeline of new movies, new titles coming out is going to help fuel its growth. And the only way I see this happening is them starting to strictly release movies on Disney Plus. So, two big titles, Black Widow, Cruella, they're going to be in movie theaters and on streaming service and on the Disney Plus streaming service at the same time. But I think very soon we're going to see it only coming on these streaming services rather than movie theaters. It's going to be big trouble for movie theaters. They're going to have to adapt, but it's going to be great news for Disney Plus. Speaking of big things coming out, big movies, Apple has a new product, and they're expected to be releasing their mixed reality headset very soon, within the next year. And it reportedly weighs less than an iPhone, only 150 grams. So these headsets are normally, you think of like AR or VR, you think of a big, bulky headset, weighs a lot, looks clunky, but no, Apple, their new one that they are reportedly working on, weighs less than an iPhone, 150 grams. And it makes it much lighter. That 150 grams, if it is that, it would weigh so much less than any other headset, any other AR, VR headset on the market right now. Right now, Oculus Quest 2 weighs 503 grams. Microsoft's, their HoloLens 2 weighs 645 grams. Valve Index, their headset weighs 809 grams. So the next closest competitor to Apple's mixed reality headset will be Apple's would weigh 150 grams, and the next closest is more than 3 times that at 503 grams. That's absolutely crazy. It weighs less than your phone, and it's just going to be very light. And that's really important. You don't want to have a huge, heavy, headset. It's going to make people wear it for less time. It's going to look clunkier. People aren't going to want to wear it. So if they can get something that's really light, really stylish, in my opinion, I think people would wear it for longer. You can't just wear like a huge, bulky, heavy headset for a long time. But the headset right now, they have some pictures or drawings of it that have been leaked. The headset's codenamed N301. They're thinking it's going to have 8K displays, according to rumors, eye tracking technology, more than a dozen cameras to track both your hand movements, capture footage that can be displayed inside the headset. And according to other research, it's going to have plastic lenses, an ultra short focal length, and micro OLED displays. So it's going to have a very high quality display, plastic screen, so it's going to be very light. and we'll have to wait and see what happens. Currently, they're discussing prices. Rumors have been around the $3,000 range. That would make it much more expensive than the $299 Oculus Quest 2, but more affordable than the HoloLens 2, which is $3,500. So I don't think the price is going to be an issue for Apple. Anything that is Apple, they could price it basically at whatever they want and people will buy it. So I don't think that'll be an issue. But it'll be interesting to see how functional, how stylish, how much these things weigh. Because if they look really clunky, they weigh a lot. People are not going to wear them. So reports say it's going to weigh 150 grams. But even if it weighs, even if it's very light, it's going to have to still be stylish enough that they don't look ridiculous, that people are going to feel stupid wearing them, because that could definitely hurt the prospects of that happening. And right now they are expected to debut in mid-2022. Those are the rumors. Could change. We don't know for sure, but it's supposed to be 150 grams. 2022 is when it's supposed to come out, and it's supposed to be around that $3,000 price. Speaking of Apple, though, iOS 15. There's been a lot of rumors about the release date, new features, device compatibility, and some other updates that they're going to be announcing with iOS 15. So as of right now, we're still waiting for iOS 14.5 to come out. And it should be coming out very soon. But with iOS 15, the release date is likely to be in September of 2021. Last year, the release of the iPhone was pushed back a bit, but still, the iPhone was pushed back from September to October due to the pandemic. But even with that, we still saw iOS 14 be released in September. So it's a pretty good bet, pretty good indicator that we'll see iOS 15 be released in September of 2021. Follow that same sort of schedule. And some things that we can expect to see. iOS 15 will likely only work with iPhone 7 and later, because they're thinking it's going to need to have at least an A10 chip. iPhone 6 models and anything older than that run on an A9 chip, so those probably wouldn't work. So it's going to have to be iPhone 7s and later that probably will be compatible, according to rumors. Some changes. Since iOS 14 was a pretty big change, they added all of these new widgets, added a lot of the redesign of how the app, a lot of redesigns with widgets and how you can arrange apps on your phone. It's expected that there's not going to be a big major change with iOS 15, but there's going to be some new tools to make widgets more interactive, more customized, more maybe make more apps into widgets. There'll be more features like that. So that is expected. Nothing major, just maybe some changes to widgets. And we'll have to wait and see what happens there. But big things that are to be expected are really just with the widgets, and potentially allow you to change some of your default apps on your phone, like iOS 14.5 will let you change your default music platform from Apple Music to something else. It's expected to maybe let you do some other things like that as well. Next up is Gamestop. Gamestop has been really just a roller coaster. It's gone all the way up to like $400 a share, down to $60 a share, all the way back up to $200 a share. Right now, GameStop is sitting right around $183 a share. Any given day, it could go up or down 50%. It's so possible. It's completely possible. It would actually be unusual if it didn't go up like a crazy amount or go down a crazy amount in a given day. But right now, Reddit users still are liking GameStop. People are still buying it. It's driving the price up and down, roller coaster ride, even though the business is struggling, because just recently, the company came out with its most recent earnings report, the first earnings report since the stock has been all over the place. And they announced that they had $2.12 billion in sales during the shopping season ending January 30th, 2021, which is a slight dip from the $2.19 billion reported the prior year. Analysts had actually projected that they would do even better. Analysts had expected the company to report sales of $2.2 billion, so they fell quite a bit short of that. They fell, $0.08 billion short of that, so around $80 million short of what analysts had projected. And really, GameStop is still in a very tough position. They're in a very tough position financially. And right now, in their SEC filing, they explained how, the stock has recently experienced extreme price fluctuations. They said nothing going on with the price of the stock has anything to do with the company, because they said, we have not experienced any material changes in our financial condition or results of operations that would explain such volatility in the price. They said there's no reason why our price is going up and down this much. It is really just all random right now and has nothing to do with the company. That's pretty interesting. But they came out the other day, they reported all this, yet the stock price was still going up. It's still up over 50% today. And that brought us to what happened with their actual earnings. Because just recently, when they reported their earnings, GameStop stock price still exploded. It exploded after their earnings, even though they missed expectations. They did worse than expected. And right now, they're debating actually whether they should sell, do like a secondary stock offering, offer more shares, raise some money for the business to fund the company, maybe make it so it actually can succeed in the future, because there is a lot going on. And if they don't change up their business, they don't, change something, they're going to go out of business. It's just inevitable. I'm not trying to be down. It's just, if you look at the business, people don't go to GameStop as much. You could just download games directly. You could just download the software directly onto your console. PlayStation, their newest console, doesn't even have a disk drive. So GameStop needs to change its business model. And one thing that the company is considering is selling us additional shares. So the problem with this is that in their SEC filing, they explain how there's no reason why the stock price is up or down right now. There's no reason for the major fluctuations. There's no reason for it to be up 1,000% in like the last couple months. So they explain the issue with them potentially raising some money, doing a secondary stock offering, is really just the perception. They explain how GameStop leadership knows the current stock price is overvalued. They know the company is not worth what it is. In their SEC filing, they said, there's no reason why our stock price is up as much as it is right now. So selling stock, issuing new shares could look pretty bad for them. My opinion, though, if the company is going to go out of business, which in my opinion, they will if they don't change something dramatically. So if they don't change something dramatically and they're going to go out of business, it doesn't matter if people are going to look at it bad, because the people who are investing in it are just all in on GameStop anyways. They love it. They love it. So if they're trying to actually survive and be a business 10 years from now, they're going to need to raise some money, in my opinion. How can they keep going? They can't sell discs. They can't just sell CDs. That's not going to work. They need to raise money. They need to really turn into an online business that potentially could sell software of some sort for games. I don't know, but they're going to need to change their business model. One thing they do have going for them is they do have the founder of Chewy, Ryan Cohen. He owns 12.9% of GameStop. He invested in it a little while back, and he's the person who took Chewy to be a major competitor to Amazon. Many people are thinking that since he was able to take Chewy, be a major competitor to Amazon in the pet space and actually beat Amazon, because they're like the main pet website to go to if you want anything pet related. So they think that he could potentially do the same thing that he did with pets, but with games, because that's what they need to do. They need to take on Amazon and be the go-to place for anything gaming related online. So that's what he's trying to do. He's there, potentially could help them do that. It's going to be a big task, in my opinion. They're going to need to raise more money. I don't see how they could do it without raising more, and who cares if it doesn't look the best, because rather not look the best but be around 10 years from now than just look good but then have the business fail, go bankrupt. So we'll have to wait and see what happens there. Next up is a pretty controversial story with Amazon. Amazon's drivers, their delivery drivers, must consent to biometric monitoring or they'll lose their jobs. And this is right now, we spoke about it a while back, I believe about a month and a half ago. A company called Netrodyne. They installed AI-powered cameras into all delivery vans from Amazon. And the way it works is that these cameras would be able to detect if drivers are going too fast, if they brake too hard, if they're distracted while driving. It basically watches everything they do all during the day, and it keeps track of that. According to Amazon, according to people high up at Amazon, they explained how this is only done for safety. They explained how they implemented all these AI cameras to help make drivers' roads safer. They said they piloted the technology from April to October of 2020. Over 2 million miles of delivery routes were done during this test, and accidents decreased by 48%. Driving without a seatbelt decreased 60%. Stop sign violations decreased 20%. Distracted driving decreased 45%. So they said, really, if you look at the overall picture, it made people a lot safer in terms of driving. But on the other side of that, the drivers don't like this at all. And a lot of people don't like this because people think it's an invasion of privacy. Some people think it's controlling. Like, do they really need to watch what the drivers are doing every second of the day while they're working? It just seems like a little bit much. So those are the two sides to it. But right now, that's the thing. And the other thing to keep in mind is they say that drivers must consent. But is it really consent if they're saying they're going to lose their jobs? Because right now, the way Amazon has this structured is they say you either have the consent to having these cameras installed and watching you and, making sure you're driving okay. If you don't consent, well, you're going to lose your job. You're going to be fired. So in my opinion, that's not consent at all. That's like a threat saying you sign this or you're fired. So that's not really consent, even though they're signing the papers. I don't know what's going to happen here. Probably going to be some lawsuits. There already are talks of lawsuits and things going on here. People are not happy about it. Some people say that Amazon is coercing its drivers on threat of termination to submit to face printing. So basically, that's just like recording images of their face, recording them driving, recording what they're doing. We'll have to wait and see what happens there, but that is something that is going to continue to develop over time. It's going to have to be a balance. I'm sure they're going to have the cameras installed because it does make the driver safer, but they're going to have to probably alter exactly how they go about doing that. Clubhouse app has been all over the news. It has been taking over social media in the audio space. It's becoming the go-to audio platform. Mark Zuckerberg, founder of Facebook, he uses it all the time. Elon Musk has appeared on it. We've seen a lot of huge names of people in the tech industry appear on this app, talk on the app, and now Clubhouse finally says its Android launch. They gave us some specific details on timeline, saying it's just a couple of months away. Recently, they hired an Android software developer just the other month, and they had said it was coming to Android very soon, but we didn't have any specific timelines. Now, they said it's going to take a couple of months to make it happen, but this actually creates some room for other companies like Twitter. Twitter has an audio platform very similar to Clubhouse called Twitter Spaces. Facebook is working on something very similar, and Twitter, they're already taking advantage of this hole in the market because since Clubhouse is invite only and they're only available on iOS, Twitter, their platform called Twitter Spaces is available on Android already. And now they're taking away market share from Clubhouse because Clubhouse is slow to market. One thing that Clubhouse has said, they've come out and explained why they're doing this, and they said that moving to Android and making it available to everyone, because right now it's invite only. They said making it available to everyone, moving to Android, requires a little bit of a slower pace. They don't want to rush into it because when it comes to opening up access to more users, both on Android and just making it not an invite only. They said the problem is that the discovery experience, just like discovery, homepage on Instagram or TikTok, the discovery experience inside of the Clubhouse app would be negatively affected as a result right now. They said users today are seeing a lot of foreign languages, a lot of foreign language groups in their feeds, things that don't really interest them. And they need to basically make that algorithm a lot better. They need to tweak, optimize that algorithm so that when there are more users, both Android and when it's not invite only and you can go in any country in the world and anyone can download it, they need to make sure that discovery experience inside the app looking for groups is much more targeted. And so the algorithm is better, so it actually shows you groups that are in your language that interest you the most, because otherwise it could negatively affect the app long term. So either way, Twitter is taking advantage of this. Another problem right now with Clubhouse not being on Android is a number of Android app developers have taken advantage of this, and they're all posting apps called Clubhouse. There's so many apps right now on Android that say Clubhouse. Clubhouse Drop-In, Clubhouse Helper, Clubhouse Audio, all these different apps that use the same exact logo as the Clubhouse app. They're trying to pretend to be, the official Clubhouse app, but either way, Google doesn't seem to be taking any precautions. They don't seem to be weeding out any of these, but it could hurt Clubhouse moving forward. Twitter Spaces could take away a lot of market share. Facebook, they have a new audio platform, could take away from Clubhouse. And the longer they take, more other companies are going to get in the way. The big names could come in, step in with their billions of dollars in their marketing budget and their budgets that they can use to develop new software. They can just step right in, develop the same thing as Clubhouse, and basically put them out of business. So I have to wait and see. Moving on to Coinbase. We talked about Coinbase a while back, and they're officially going to be having their IPO this year. And their CEO, Brian Armstrong, is going to be worth $14 billion, approximately, as soon as the stock debuts. So that's a pretty big deal. Right now, at the private market share price this year, Coinbase's stock price was at $343.58, so right around $350 a share. That's at their private rounds where they've been raising money. Brian Armstrong, he owns 39.6 million Coinbase shares between his Class A and Class B holdings. And big thing to keep in mind here is that he can sell his shares immediately. Most of these companies, they have a lockout period where a lot of these C-level executives cannot sell. But he does not have this with their company. So it'll be interesting to see what happens here. Coinbase has been doing extremely well with the rise in price of Bitcoin. When their IPO announcement first came out, they spoke about how Coinbase does extremely well when people are, when Bitcoin does well and Ethereum does well, because it's driving more people to invest in cryptocurrencies. And Coinbase is one of the main platforms. They're essentially, the way I see them, is a Robinhood, but for crypto. In my mind, that was one of the first cryptocurrency platforms that it was one of the first I had heard of. And a couple years ago, back in like 2017, I had heard of them and a company called Binance. Those are the ones I heard of. And they were just the easiest platform for anyone to use for the cryptocurrency space. And they've continued to develop, continue to grow over time. And now he's going to join the Deca Billionaires Club with Jeff Bezos, Elon Musk, Bill Gates, Mark Zuckerberg, all these other tech founders. Same as with founder of Snapchat, Evan Spiegel. It's going to be pretty big. We'll have to let you know specific details on their IPO, what's going to happen here. But I think this is a company you're going to want to keep an eye out for in 2021, 2022, especially if crypto keeps doing well. And now, Cathie Wood and Ark Invest Tesla. Cathie Wood came out with another big price prediction for Tesla. She said Tesla is going to reach $3,000 a share by 2025. That's a big claim because previously she was the one who came out and said that Tesla would reach $7,000 a share. That was before the stock split. So right now that would be like around $1,400 a share. But either way, she had said basically Tesla would 10x from where it was just a couple of years ago. No one believed her. Everyone thought she was crazy. She basically just did the same thing because she said Tesla will reach $3,000 a share, which would give it close to what is that? Close to like a $3-4 trillion market cap. It'd be the largest company in the world. And she thinks that it is very possible that this could happen. They explain how her bull case is $3,000. Her bear case, the base case is $3,000. Bull case is $4,000 a share, and the bear case is $1,500 a share. So she sees the worst case scenario is that it's at $1,500 a share by 2025. Some of the key assumptions in this is they explain how most of the market share increase in the price, most of the market cap that's going to be generated is going to be through its electric vehicle and robo-taxi business lines. They think that that's going to generate roughly 40 to 50% of Tesla's expected market cap. The robo-taxi business is one that they're expecting to be massive, generate tens of billions of dollars in revenue. And Ark Invest sees that Tesla's going to be selling between 5 and 10 million vehicles a year by 2025, which I think is definitely very doable. They did about 500,000 this year. They're building factories in multiple countries all around the world. They're really ramping up production. I don't see that being an issue. The next assumption is that they assume Tesla has a 50% chance of delivering fully autonomous vehicles by 2025. That's where it starts to get a little, it's not unreasonable, but with fully autonomous robo-taxis and everything like that, that's even if Tesla's capable, which they basically already are, there's a lot of regulations in place that they're going to have to jump through a lot of hoops in order for that to happen. And even if Tesla is fully ready, which they basically are right now, the regulations and steps you have to take with the government is going to really slow it down. Third assumption is that the insurance business is going to add $60 to the long-term price target. And Ark Invest also sees Tesla launching a robo-taxi service with the possibility to launch a human-driven ride-hail service first. So they really think that Tesla is going to launch like a competitor to Uber or Lyft because they already have all the vehicles on the road. Then they think that that like a ride-hail service, ride-share service, that could be one. And then eventually they think they're going to also go into the robo-taxi space. My thing is, I think robo-taxis will be huge, will generate tens of billions of dollars in revenue for the company. The one problem is they explain how Tesla could generate $160 billion in EBITDA from the robo-taxi business by 2025. The one problem I see is just the regulations. There's a lot of problems with regulations in that space. It's not just, regulators are not just say, yeah, go ahead, let the cars drive by themselves. It's not going to happen so easily, at least in my opinion. So even though the technology is there, the technology is going to be slowed down just because of regulations with the government, in my opinion. But either way, Cathie Wood, Ark Invest, another big prediction, Tesla to $3,000 a share by 2025. But that's all I got for you guys today. Covered a lot of different stuff. Let me know what topics you want to see in the next video. We're going to be doing these every single day now, covering a bunch of different topics. And if you made this far, comment down below what topic you want to see in the next video. And also comment down below a car emoji for Tesla. I hope you guys enjoyed today's episode. Don't forget to get your 4 free stocks when you download the Webull investing app. It's free money. You get up to $1,600. You don't have to do anything. Hope you enjoyed, and I'll see you guys in the next episode.